The Reserve Bank has increased the official cash rate to 5.5% last week, up 25 basis points from previously, and this marks the 11th consecutive increase in the official cash rate. The Reserve Bank Governor Adrian Orr, this guy, said that this marks the end of the current rate increase cycle, and they will most likely keep the official cash rate as it is for the foreseeable future. And they have also suggested that there won't be any rate cuts until at least the end of the next year. So what does this actually mean for everyday investors? So this is what we're going to talk about in this video. The first thing that we want to talk about is the interest rate. So there are two main interest rates that could be of great interest to everyday investors. The first one is the interest rate of your personal investments. So these are most likely the everyday savings accounts. For a bonus saving account at the moment, most of the major banks offer around the 4.6 to around 5% when it comes to the bonus saver and the premium notice savers. Now, because the official cash rate is stated to remain the same for the foreseeable future, the basic savings rate is quite unlikely to change in the foreseeable future as well. The next interest rate of great importance to everyday investors is, of course, the mortgage rate. So many of the first home buyers that have bought a house maybe around a year or two ago have been really hit hard by the increases in the official cash rate. So the increase in official cash rate obviously means an increase in mortgage rates. So again, many home buyers, especially the first home buyers, are starting to feel the pinch. Currently, the variable floating mortgage rate for many of the major banks hover between the 8 and 9% region. And again, with the official cash rate stated to remain the same for the foreseeable future, these floating interest rate is most likely to remain quite similar. Currently, the mortgage rate paid by the home buyers sits at around 4.7% on average. This is likely to increase to more than 6%, according to many of the economists. And this should happen towards the end of this year. But what does this actually mean for the all-important housing prices? Everybody cares about housing prices in New Zealand. So across New Zealand, average housing prices sits at around 900,000. Over the past 12 months, it's down by around 13%. In major centres such as Auckland, the past 12 months saw a decrease in average property prices by around 14.5%. In Wellington City, over the past 12 months, property prices have been down by around 20%. This goes to show that Wellington has probably the most overheated housing prices around New Zealand and saw one of the biggest falls. Christchurch, on the other hand, saw a decrease in housing prices over the past 12 months by around 10%. So they're down by around 10% over the past 12 months, and this is definitely less than the other main centres such as Auckland and Wellington. Some economists have suggested that housing prices have pretty much dropped to as low as it will go, and it pretty much has hit a bottom. However, on the other hand, net immigration has been trending upwards over the past couple of months, with far more people coming into the country than leaving the country. So if there is a consistent increase in the immigration and people coming in, then this may serve to drive up the housing price once again. So what does this mean for the exchange rate when it comes to New Zealand and other foreign currency? So many forecasters actually expect the official cash rate to go up to 6 cents. So because of that, New Zealand dollar has been weaker against other of the major currencies. So with the New Zealand dollar down 3% after a pause on the official cash rate hike. Over the past week, we can definitely see that there's been a pretty steep drop in the exchange rate when it comes to New Zealand and the US dollars, and they've been down around 3% or so just within the past week. So if you're looking to travel anywhere in the recent foreseeable future, you're likely to be paying a little bit more when it comes to converting your New Zealand dollars into foreign currency. The final thing that I want to talk about is, are we actually still in a recession or going to be in a recession? Now, the Reserve Bank has actually revised some of the things that they have said previously. And now they've decided to say that we probably are only going to have a very minor recession. And then some economists basically said that we probably won't be having any recession at all. And my thoughts to all of this is, why does it even matter? Looking at the unemployment rate at the moment, it sits at 3.4%. And 3.4% is pretty much around the same area as we have had over the past 1.5 years. So when you have pretty much consistent unemployment rate, it means that people aren't exactly losing their jobs. What has actually been happening is, of course, the inflation. So basically, it means that people are now choosing to spend more money on essential household items such as food and shelter and rent and all that sort of things. And people have been cutting back just slightly on luxury items. So basically, they're just shifting their expenditure onto the essential items. So are we in a recession? Personally, I don't really think so. People have just been spending money on different things. But are we going to actually have a recession? Well, if you think about it, recession is really just a technical term, basically saying that people aren't really going to be spending money on things that they otherwise would be spending money on. So in that sense, yeah, probably. But again, overall, it doesn't really matter either way.